Jeff. Okay, I need two emails to go through today. The market's obviously had some major pushes overnight, thanks to ECB, with Aussie not really going anywhere. Um, you know, Kiwi, everything else is really moving. The CAD's not really going anywhere. Obviously, the euro got smoked to it, two big figures, or 2 cents. The pound got taken with it. The yen's still going, or it's more the greenback strength. So there's really not much to look at, and I noticed that the book is the orders are being reduced dramatically, and that's just, I'd say people getting either stopped out or hitting their targets. So which is hopefully hitting targets. There's a lot of positive results this week, so that's great. A lot of people hitting their targets, which is fabulous. But the reduction in orders would suggest that there's not much setting up, and people sort of staying away until next week, which is understandable considering the central banks that have had this week, and non-farm payrolls tonight. Certainly the US greenback is still pushing hard. So it's surprising to see the Aussie sort of sitting here in the middle, whilst all these others sort of making good trends. So we'll just cover the two emails, and then if you guys haven't got any questions for me, have an early mark for Friday. First one, looking at this, and I see the question here says, does the hidden bearish divergence, over the longer cycle, or the trend reversal being a phase one, trade short and not a phase two? So I think what you're trying to say is that we've got the hidden divergence, which would indicate or that we look for in a new phase one, and we've got reversal divergence that we look for in a phase two. So is this to be traded as a phase two, or is this to be traded as a new phase one short? And that's a fair question. I would be looking at this as a phase one short. Whether the 50 is still under the 200, although it's obviously moving back towards it. There is that resistance that you indicated. Again, my history won't show it, but there's that horizontal resistance in that zone there. You've highlighted the Fibonacci of that large cycle, and if you go to the one that's under the 50 there, we can see the 786. But more so the divergences, which is what your question was looking at. What you're wanting to see, and what you are seeing, is that shift in momentum. And as you've sort of pointed out, you've got this large cycle here with that divergence there, which is a bearish indicator. You've also got what you've also indicated is this reversal divergence, which is what we normally see in a phase two at the end of phase one. Either way, they're both bearish indicators. So to me, that would suggest that this is not necessarily something to take as a phase two, although you could if the risk reward was there, which it's not. However, you could be looking at this as a new phase one, and potentially maybe even a range, but you'd be targeting this area here, so risking sort of, what's that, 260 pips. This is a yen, so risking, what is that, 260 pips for 500, or so it's about 2 to 1, even if you had your stop up there and weren't using the ATR. About 2 to 1, and what we're seeing is the momentum having peaked and should be pushing back down towards the other side of the indicator. I know you're online, mate, so does that sort of answer your question, or have I dodged around it? Gotcha. Okay, so they're both, in a nutshell, that both those divergences are indicating that there's the selling or the bearish and should be used to support a new phase one trade. The only other question we're looking at is the Aussie Kiwi, and the trader has highlighted that this weekly trend has been broken, and then we have another slower rising channel which has also been broken, and there's convergence. Yeah, and it's broken out of this channel now. And I do note, and I'll continue to note this, that the divergence is getting towards the top side. The reason I point that out is the euro is an example of you can be in the oversold territory, and when the fundamentals, such as a central bank comes in, it can push it well beyond its limitations. And similarly, the pound is in the oversold territory, but it's still continuing to fall. So indicators are just that, indicators. You should be looking at price action. And again, here was a news announcement that pushed price, and last night the BOE didn't do anything, and so price got pushed around more by the euro really than anything else. Anyway, back to the Aussie Kiwi. This is now the daily chart, and we're looking at you've got your Fibonacci from this across this channel here, and that's your 1.272. And you can also look at the Aussie Kiwi in the sense that, so you've drawn that and said, well, we're at the 1.272. But you could also look at the and say, well, there's a bit of a phase two there, and you know where we stopped at 2, and then it's continued on. And you've noted that it broke through this this channel and retested it before carrying on. The question on this, RSI is still in convergence, yes, although there is Class C bearish divergence at this stage, but you can't really call it divergence until you're getting some selling after the fact. Right, so similarly along here, we're seeing these, this higher highs here, and we're getting the Class C divergence. But we only notice that after after we get this bar here, because at this point you're still in convergence, and RSI is still following price. Yes, it hasn't made a higher high yet, but it also hasn't finished yet. There's no selling yet. It's still buying. Okay. So then we come down to your 240 analysis, and you've noted that it's been cycling along the 50 to a certain extent, or along this trend line that you've pointed out, which I would suggest that it's probably more the trend line than the 50 EMA. This is only it's had 2 cycles, but a lot of rubbish in between. So you had this cycle along the 50, this cycle along the 50, but all this rubbish, whereas you could say, well, there's phase 1, there's phase 2, there's phase 1, there's phase 2, and we're in sort of in the middle of the new phase 1. Yeah. And momentum is still in convergence, but also overdone. So you're getting to the top end of this range, and that's my concern. Is you're looking at to say this has been great, and we should be buying it. Yes, we should. There was an attempt at a phase 2 in here that failed, which is always, well, not always, is phase 2 trading is very difficult to get, especially when you're trading in a strong trend. My concern is, I think we're a little late in buying this. Even on the 4-hour, it's very hard to be sort of getting into it at this point. It can be doing this, and with the momentum overdone on the On the weekly we're in the 80s. On the daily we're in the 80s. On the 4 hour, well, there's divergence there. You're at the extremities, so it'd be something like the 1 hour that I'd be looking at trading. So we're not trying to get 100 pips, because the issue is if you start getting in here, where's your stop realistically going to be? Even if you use an ATR stop, and your stop is in this area here, somewhere around here, you're looking at something like a 50 pip or a 60 pip stop, and therefore you need to be targeting 100, 120. And if what is the likelihood of that happening when your momentum's already way up here? There is a bit of resistance here, which it hasn't taken note of just yet. But that's why I've always said $1.12, and once it hits $1.12 or breaks through $1.12, I'll be looking at $1.20, which is this low here. Yeah. These lows across here. So the point I'm trying to get to is that if you're risking 50 pips or more, what's the likelihood of you getting 1.5, like 75 pips or more out of the trade when you're way up here? So it's better when if it's running like this and you're not in the trade and you're wanting to participate in it, and start looking at the 1 hour and going, well, I'll look at risking sort of 30 pips because it's or 20 pips because the likely I could get 50 or 60 pips out of this trade, but it's really pushing the or decreasing the probability of getting sort of anything more than that out of this run. So a little ring low like this would be something that you should be looking at. Yeah, and we look at the majors or the underlying. The Kiwi's still shitting itself and still got room to do so, and the Aussies just it's just really just there's so many analogies and most of them are rude, so I'll leave it alone. But there's something like this little move here, which is you could effectively say it's a retest of that level there. Is something that you'd be looking at, and what's that? Risking something like 15 pips, 20 pips, and going for 40 pips. That is where I'll be going with that. Does that? It's a good question, and it's sometimes it's hard to be trading out here when the momentum's already well and truly done. It's like the euro. Would you have been selling this? No. The 4 hour cycle back to the. You'd be a pretty ballsy trader to be selling that on a technical move when your momentum's already overdone. Similar to the pound, as though selling in here would have been a ballsy move. Trading the fundamentals or trading the news that's a different kettle of fish. You can just on the euro last night, when Mario's made his call, you just sell the hell out of it. That's a different kettle of fish. But when you're trading like this, it's difficult to be buying here, thinking, oh well, there's another 150 pips in this. Well, there could be, but the probabilities are reduced when you're out here swinging in the breeze. Does that make sense? Yes? Cool. That's about it. I'm not really looking at anything this week. We've got the non-farm payrolls tonight. Don't expect that to have a major drama. It could. Certainly could be doing that. But you're seeing with the ECB last night, there's certainly a major shift out of out of European interest rate markets. They've gone negative. He lowered the headline rate to 0.5%, but he lowered the ECB lending rate to point 0.2, negative 0.2. So it costs money to keep it there, and so the bond market's gone negative, and so funds are really shifting out of interest rates and out of currencies, certainly out of the European sector. Their stock market had a 1% rally, but as soon as their stock market closed, the US stock market reversed, and you can see the flow of funds really flowing into the US bond market. It's not a safe haven bid by any stretch of the imagination, but it's off the concept of the Fed raising rates and looking to do so in June next year. That's where all the money's heading. And so the US dollar is getting great benefit from that, and with the ECB shifting to negative and also now talking about QE, quantitative easing. They had a vote on it last night or yesterday, and Mario lost, but they're certainly not out of the woods yet. So that's going to continue to force funds to go and seek yields elsewhere, and that's probably why the Aussie's holding up reasonably well. With our steady rates at 2.5. The Kiwi is a different issue. Whilst they've got 3.5 or higher interest rates than we do, their currency's under pressure because of their economy. It's the unemployment data tonight. That's what the Fed is looking at, is wage growth and unemployment as a sign to say when they're going to be raising rates. They've still got to reduce the QE to 0, which is another 2 times of 10. I think they're around 15. I think they're around 15 somewhere now, or $18 billion or something like that, and they've got to reduce that to 0, and then they'll be looking to see what the effect on the market is when they're not supporting it. Give that 6 months, so you're talking about June next year that they're raising rates whilst everywhere else in the world is steady or negative and heading down. So that's where the funds are going, and you've got to follow the money. You can see it clearly in the charts. It's just finding the opportunities to participate in it. Alright. I've got nothing else for you guys with only those 2 emails. Going to have a early mark. Be careful of non-farm payrolls tonight. You guys are quiet. What have I got? 15 of you online. Right out. Okay, any views on next week? Next week. Well, next week, what do we got? Not sure what's happening next week. September 9. Why have I got that in my head? What's happening on the 9th of September? 9th of September, 9th of September. Carney speaks. There's something else happening on the 9th of September. I can't remember. Something on the 9th of September sticking in my brain that I need to be aware of. You've got RBNZ, and that's really about, that should come out, unemployment. Moving into next week, apart from those headlines, you'll be looking for, I'm sort of staying away from phase 2 trading, but that's pretty much waiting for that cycle to come back and giving us an opportunity, or participating in the shorter time frames. Grabbing 40-50 pips where you can out of moves like this. Yeah. September 9. What's happening on the 9th of September? I know the Scottish vote is on the... Scottish vote's on the 18th. Does 9th of September ring a bell for any of you guys? No? No. Yeah, I can't... Anyway, you guys have a good weekend, and we'll talk again on Monday. Cheers.